What's up, everybody? Welcome back to another episode on Keeping It Real with Credit. And on this episode, I wanted to go ahead and go on a little rant. I was actually on YouTube right now answering to some of you guys' comments after watching some of my videos. And within reason, the most commented video and the most critiqued video, I would say, is my never ever pay collections, which, as some of you guys that are following me know, that I've made a part 2 version of that video elaborating a little bit more as to what I've meant. If you're new to this channel and you came and got yourself introduced to this channel because of the never ever pay collections video, I suggest you watch that part 2. And this is my reason why. Keep in mind, guys, that credit is a formula, right, that gives you some sort of number that lets banks know your availability, not your availability, but your ability to make payments over time. And it's important to remember that it gets reported to this thing called the credit report. And in that credit report holds a lot of information of each individual consumer. And it's what banks usually use to kind of analyze whether, your payment habits over time. Now, with that being said, there's also acts that, by the way, are created by the federal government, and one of which is the Fair Credit Reporting Act. That act states that if anything is unverifiable, inaccurate, or incomplete on your credit report, it must be corrected or removed. This goes with the correct spelling of your name. If you have a middle name, if you have a second last name, that's on your social security card, and it's not reporting that way on your credit report, that's a good indicator that the accounts reporting below hold that information. So if you're an individual that has a collection on their credit report or some sort of negative item on your credit report affecting your score, and the information reporting above, such as your name, addresses, phone numbers, and any of those sorts of things that are reporting, that means that the accounts reporting below hold that information. Now, depending on what your goals are, it's important to understand that there is a strategy to this. And what I mean by that is let's get things straight. If your goal is to pretty much buy a car or buy a home here on in the near future, it's important to understand credit and analyze your credit report for any particular negative items that are going to affect your score. So consider this formula right here, and this is actually pretty perfect. Just wondering if you guys can see there. Your credit score is pretty much made as far as what this chart shows, right? So as we see here, that 35% of your score is your payment history. It is the biggest factor that affects your score. If anything goes into collections or you miss one late payment, it'll actually drop your score of up to 100 points. That can greatly affect your score. The 30% of your credit score has to do with the amounts owed, or as it states here, how much do you owe and how much of your available credit is used. This is why that when you get approved for a new credit card, you're already starting in the positive, not owing money. As opposed to a car, when you get approved, or a home loan, you're already starting off by owing that money. So when you add things like that to your credit report, this can be, in a sense, maybe that your score is going to drop. It can be detrimental depending on what are the other factors that you have reporting on your credit report. And it's not until you start making payments and past that 50% of the completion of that loan, it's not where you're going to start seeing improvements on that score alone. Now, length of time has to do with 15% of your credit score. And length of time or credit history is depending on how long you have your credit open for, makes that a little bit more stronger towards your credit score and your overall credit history. Banks love to see this because they like to determine your availability to make payments over time. And so if you have an account that you've been paying for 3, 4, 5, even 10 years without not one late payment, then obviously that's going to be very beneficial to you. Now, the next thing I want to touch on is 10% of your credit, which has to do with the types of credit used. Your mixture of credit. What does your credit portfolio look like? Banks like to see a mixture of this because they like to see how you handle multiple amounts of credit. Home, car, credit cards, student loans, so on and so forth. The more credit accounts that are on your credit portfolio or your credit report with little to no payment, negative payments, with a long credit history, that's obviously going to impact your score in a positive way. And then obviously it goes to new credit or inquiries, as you know, as some of you guys may recognize, it is 10% of your score. So although inquiries can affect your score over time, it's only 10% of your credit. But go ahead and start racking up 10 to 15 inquiries at a time. That's going to really be detrimental to your credit. And when a bank looks at this, they're going to really be suspicious as to why you're applying for credit so much and make you be and deny you, because nobody likes a desperate individual. So let me go around back here. All right. So why is it that I'm repeating this information again? I'm pretty sure that with me and Justo's videos, you've been watching this information and it's probably going to be repeated over and over. One thing that I want to state is everybody must be clear as to the credit formula and the credit scoring models that you guys are receiving either through Credit Karma or some online credit monitoring source compared to what the banks are actually using. So if you're looking to buy a car, if you're looking to buy a home, if you're looking to get some sort of credit extended to you, the bank that's analyzing your credit score, it's probably most likely using a FICO scoring model that is older and not newer as to what's extended to you online. So for example, if you go to Credit Check Total, if you go to privacyguard.com, they're going to be running on a FICO scoring 8 model. I believe to this date, last time I checked, there is a FICO scoring 9 model, which does not factor in paid collections or hospital bills. And everybody has a fantastic score on that, right? But you cannot go by on that score. You have to realize that the scoring models that the banks are using up today, the ones that are lending you guys credit, are using FICO score models 2, 4, or 5. And those FICO scoring models do count a paid collection or a non-paid collection as a negative factor on your credit. They also factor in hospital collections, whether they're paid or not, as something very impactful and negative towards your credit. So as I discussed before in the Never Ever Pay Collections Part 1 and Part 2, paying those accounts, those collection accounts, although it might be better, make you feel better, at the end of the day, paying those collection accounts will not remove them from your credit report. Now, there is something that's called a pay for deletion, but asking for a paid deletion is very hard and it does not happen often. And unless the collection agency is offering that to you, you must first get it in writing, and the writing must state that if you pay X amount, this will be removed from all 3 credit bureaus, not something along the lines of if you pay this amount, it'll be reported as satisfied or fully paid. Because as we know, that on your credit report, whether it's a paid collection or not, it's still going to impact your credit score negatively. Now, if you're an individual that by now you have a car, you have a house, a boat, and everything that you've ever wanted, and you don't need to use your credit, then by all means go ahead and start paying all your debts down, to include collection agencies. But now keep in mind that collection agencies have to abide by rules and regulations given to us by the federal government, and we're protected as consumers from that. There's something that's called the Fair Debt Collection Practices Act. There's something that's called the Fair Credit Reporting Act. And these are things that, again, are made to protect us as a consumer. Keep in mind that what happened to me before, in the beginning of all this, before I even thought about making a YouTube channel, was that there was a certain group of people that called me and they read me my social, my account numbers, my address, and they had all the information that led me to believe that these were the people that I was supposed to pay. So after the fact, after suing them in federal court, we later found out that these were just a group of individuals. They weren't even a company. They weren't even licensed to collect. These people bought my information from God knows who, along with everybody else's information, and started acting as debt collectors. And on top of that, they started acting as lawyers. And $4,000 later, I was duped out of my money. Luckily, I was able to find them and get my money back. But yes, even if somebody calls you on the phone and says you're social security number verbatim and your address and your account numbers, that doesn't mean nothing at all whatsoever. Flex your rights, dispute the information, investigate the information, because at the end of the day, you are dealing with a third party. Now, some of you guys may come at me with this video and said, not all collection agencies or not all of those companies buy the debts. Well, at the end of the day, whoever's on that phone is still working on a commission, and they get paid based on if they close that deal. With that being said, guys, go ahead and flex your rights. Go through the proper channels. I'm not saying not to pay your debts or ignore your debts at all whatsoever. What I'm truly saying is to go ahead and go through the investigative process. Flex your rights. They're there to protect you and to help you. And if you're looking forward to buy a home, a car, a boat, whatever it is, if you're looking for a bank to extend your credit, please realize that they're not using the FICO scoring models that you're seeing on the computer. They're using an old FICO scoring model, and whether you like to hear it or not, they are factoring a paid collections or not paid collections as a negative factor on your credit report. So with that being said, if you want to get approved for that loan at the best interest rate possible, it's imperative that you have no negative items on your credit report for you to take advantage of the best interest rates. So you must dispute your information. You must use the Fair Credit Reporting Act. You must use the 9 acts that govern and protects us as consumers. Whether you do it yourself or you hire a credit restoration company, they're there to help. And it's up to you to realize and do your research as to what the best option is for you. With that being said, I hope that information came out clear to you. Keep continuing watching this channel, as I'm going to continue to keep it real with you guys. And until next time, stay real, keep it humble, and I'll see you next week on Keeping It Real with Credit. Peace.